It's Friday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us an update for the brokers. We also have Kevin Hill in-house giving us a DHL supply chain pricing power index update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday Carrier Update presented by PowerFleet. I'm Zach Strickland, and we continue to watch volumes rise. They still continue to rise despite the concern over the fact that we're thinking that this is not going to be sustainable, which it won't be sustainable. We're not going to see 24% higher volumes all year long. That's simply not it's not possible at this point. But at the same time, it is fascinating to see that we had a 2.15% increase yesterday on the volume. So we are not seeing signs of slowing down, at least in aggregate. A lot of the volumes, of course, are moving in some of these larger markets across the United States. Looking at the overall picture here with the van and Reefer. So Reefer took a little bit of time to get going significantly, but van has been robust throughout the month of March. Starting about March 2nd, volumes really started to pick up. Reefer volumes really picking up here in the last week or two, both showing significant increases. So the largest markets in the country, Atlanta, Harrisburg, Ontario, Dallas, continue to drive a lot of that. Ontario, however, slowing down just a little bit, not showing as strong of an increase as it was this time last week. But again, the Southern California markets do have a lot of relationship with the port volumes, and those have not been as strong here lately. So continuing to see a lot of the short haul volumes and mid haul volumes really be stronger across the country, but long haul volumes showing up as a big increase here recently. So we might be seeing a little bit of a trend change in terms of length of haul that's moving. Looking at the overall country here, the weighted rejection index, you see these dark blue markets. That's our biggest markets in the country, and they are showing quite a bit of activity. The weighted rejection index, normally we're talking about it being between about 5 and -5. Right now it is at a 30 all the way down to -3. So that's a really wide range on the weighted rejection index. We are not in normal times, if I need to say that at all at this point. But Atlanta, Harrisburg, Saginaw, or I should say Grand Rapids, Michigan up there. And then the Salt Lake market, of course, has been a little bit of an anomaly in the way that it's not really part of the big 5 markets. So it's showing up on our weighted rejection index as seeing some of the highest amounts of rejection in relation to its market share value. So the Salt Lake market really, I think it's up here in the top 5. It's in the top 3 of weighted rejection index values at a 26. That is simply unheard of with the weighted rejection index for a market that's not in Atlanta, Harrisburg, et cetera. I think around Christmas time, we saw a value of about 22 to 23 at the highest point. Outbound rejection index values right now have now broken through the Christmas level where they were around 14.31. Now they're right at 15%. So again, capacity has tightened in relationship to the demand. But going back to where we were here, the Salt Lake City market is probably an area of concern here moving forward, because it is not necessarily one of these larger markets. Indianapolis, Columbus, Ohio, for instance, really, these are 2 of the big Midwestern hub markets showing a roughly 2 to 3% of the overall market volume. So again, that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello everyone, good morning and happy Friday. We've made it to the end of the week and we're getting close to the end of the quarter. As I'm sure you're aware, tender rejections and volume levels continue to rise and push to all-time highs. Obviously this isn't quite sustainable, but we'll see how long it does last. The blue line here is going to be the volume levels in the United States, and the green line is going to be rejections. You can see obviously that volume is far above where it's ever been in the last year. And then the green line is rejections, and we've already broken the 2019 high, which happened around the New Year's holiday, which means spot market pricing is going to continue to rise and shippers will continue to have a harder time covering their freight. Now, let's get away from this real quick. We've talked a lot about dry van freight. It's time to look at reefer freight. I told you this was going to come. Is it the signs of reefer season or produce season already, or has the coronavirus and restocking of grocery stores simply given us a kickstart? We'll have to see, but what is happening right now is reefer volume levels, you can see here, over the last year have really just surged. That blue line is a reefer volume level, or excuse me, since over the last couple of months. Now, that is the highest we've seen reefer volume in the last year. Now, the orange line is reefer tender rejection, sitting at about 23.25%. That's the second highest we've seen them in the last year, second only to the New Year's holiday we just had. So that's going to really put it's a really sharp increase only over the last 7 days that's shot volume and rejections up for reefer freight. The market that we're going to focus on today, though, is Lakeland, Florida. It has the most reefer volume in the country right now, and you can see here this blue line is that reefer volume really just shot up since the 15th, so only a few days ago, and it's increased by about 100% over the last week. That's a massive increase. Now, draw your attention to this green line. That is the reefer inbound volume going into Lakeland, Florida. So you notice how far they start to diverge. Typically, there's a little bit more reefer volume that goes out of Lakeland than that goes into it. So that's typically a good place for carriers to be if you do have reefer trucks. But it's really started to diverge. That's going to put a lot of pressure on rates. We'll see as that capacity continues to tighten and there's a lot more need for outbound freight out of Lakeland than what's going into it, you're going to start to see that reflected in pricing. And we're going to take a look at the rejections soon. But if you are moving reefer freight, Lakeland, Florida is going to be the place to look. And if you're a broker and you're trying to find a new customer, look to Lakeland, Florida. I'm sure they could use the help. This next chart here is the reefer tender rejections out of Lakeland, Florida. So you can see here we're sitting at almost 25%, so just above the national average right now, which is very good for a market of this size. Now, you'll notice this spike that we had right around 2020, that New Year's holiday. We've already surpassed that. That was around 21% at its peak. So this is the highest Lakeland, Florida's rejections have ever been over the last year. And you can see here, right around the 15th of March, where that little arrow is pointing, that is when we really started to surge. We were sitting at about 4%. So over the last 5 days, we've increased 5x. So reefer tender rejections out of LA have increased 5x over the last 5 days, which is absolutely insane. Spot market rates for reefer freight out of Lakeland will be through the roof. If you're moving freight out of Lakeland, Florida, reefer freight, increase your spot market bids far above wherever contractor rates are. Carriers will ask for that premium, and carriers should ask for that premium. So brokers, make sure you get it from your shippers. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hello and welcome to your DHL Supply Chain Pricing Power Index update. I'm here with Kevin Hill. Kevin, what's the latest?
The latest is another 15-point jump in the index. That's 2 weeks in a row where we had 15-point index jumps over to the carrier side. And for the first time since we've been doing this for about 8 months now, the balance of power switches over to the carrier. So 0 is to the shipper, 100 is to the carrier, 50 is balanced market. It was down at 25 just 2 weeks ago, or actually 3 weeks ago. And we've jumped all the way up. And of course, volumes are up week over week, year over year, and they're expanding rapidly week over years, or week over week. So 6%, 7%, 8% week over week growth right now. And
that's pretty significant. I mean,
it is.
Last week we were just here. We had the update. We had a 15-point gain. That was the largest gain, right?
Yes.
And since you've been measuring it and tracking this, we have another 15-point gain. So, as you mentioned, big driver is volumes.
Volumes 24% up. Spot rates are up. According to truck stop data that we have, the rate data, about 2/3 of lanes have seen a jump, and I think 10 to 20% have seen double-digit increases week over week. So we're in, a lot of those are the emergency essential items are restocking right now. I don't know how long this is going to continue. But for carriers, it's good news, good rate, good volumes after a hard 2019. But
right.
yeah.
And as Zach mentioned earlier, these are not normal times. So when we're looking at this, I'm almost scared to ask, what does your 3-month outlook look like?
It slides down a little bit, right? So 10, 15 days, and Zach says the same thing. We should see these volumes start to drop off a little bit. Our 3-month outlook 3 months ago, though, was at a 55. So we pegged it for all the wrong reasons, actually. Right. But we did peg it. But I think our 3-month outlook is around 45.
Gotcha.
45 to 40. We'll see how the buying continues. I know GDP forecasts are pretty pessimistic right now. I mean, very pessimistic, actually. -12, -14% for the second quarter. So we'll see how all that fleshes out over the coming weeks.
Yeah, and I think when we're talking about GDP, that even kind of amplifies the uncertainty, right? Because
it does.
We've had on the low side many reputable institutions put out as low as -14. Mm-hmm. We've had other reputable institutions put out something around the -4 mark. So there's a wide range, a lot of uncertainty in the next coming weeks, days even, or even hours.
Yeah, I think we talked about it yesterday too. The jobless claims, 33% increase week over week, and we're just now getting into this COVID-19 type of situation. So we'll keep a very sharp eye on that, as well as you will do the same.
Of course,
right?
Of course.
And we'll see. It's week by week, day by day kind of forecasting right now.
Exactly. And Kevin, you had a pretty significant research team here, right? So how could some of the folks get more of these insights?
Definitely. So Sonar subscribers and Passport subscribers both have access to our research. And for Passport, you can go to freightwaves.com/passport and see some of the previews of our reports and subscribe to that service.
Excellent. Kevin, thank you so much. Looking forward to next week's edition. And thank you so much. That's going to do it for this edition of the DHL Supply Chain Pricing Power Index. Be sure to tune in next week for your update. That's going to do for this Friday edition of FreightWaves Now. The content does not stop here. We're always streaming around the clock, so check us out on all your favorite streaming platforms, including Apple TV, on our FreightWaves TV app. Also, be sure to check out, as Kevin Hill mentioned, our Passport program, where you get all of the latest research for the industry's breaking trends, especially during these uncertain times. Thank you so much for tuning in, and we'll see you on the next episode.